Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
I guess we'll start off by saying a happy new year to everybody who is joining us. Mark is out today, but Sachin and I will be kicking things off and kind of really talking about where we're headed next in this sort of post election result, apparently pro crypto, pro AI driven macro environment. And I guess I'll first begin by saying thanks to everybody who has been joining the webinars pretty consistently throughout the 2024 year. In 2025, I think we'll be at a pretty good point because we're going to be looking at basically a summary of all that's kind of come before us and a moment where we couldn't be more excited as a team, as investors, and really enthusiasts into the space. And I think before we kind of jump into kind of what comes ahead, it might be helpful to kind of take a little bit of a look back. And as we look at what happened in 2024 that really set things up in a favorable way for 2025. And perhaps I can kind of open with a couple of remarks and toss it over to Sachin to kind of get some of his takes. But I think really in 2024, it was the beginning of a formative year when it came to just cleaning up the industry in crypto. So there was a lot of eyes on the halving, right? And so that happened kind of in the later half of Q1 into Q2. And really kind of ahead of that, obviously we get caught with a very common phrase that, no, this time is different, but it really was different leading up to the halving. And so really, what is that? I mean, that's that seminal event where more Bitcoin are minted and the costs for mining Bitcoin kind of are cut in half, hence the term halving. And that sort of creates a artificial deflationary measure while also producing some more, albeit a tiny amount at this point, as there have been many other halvings, increase the Bitcoin supply. And what correspondingly happens is a sharp, quick rise to the price of Bitcoin. And ahead of that halving, there was a whole lot of things that happened before that, primarily the rise of ETFs and the approvals in the U.S. And so, not just one, but 11 financial institutions, including one of our own portfolio companies, Bitwise, were kind of given these golden tickets, which quickly led to the most successful ETF launches in history and led to a lot of people very quickly and very easily buying Bitcoin, in some cases for the first time through ETF instruments. So that really kind of tipped the scales as far as, what the halving was supposed to do. You had record highs happen even before the Bitcoin halving. But then, of course, you had other events throughout the rest of the year. You had some very favorable legislation and outcomes within pending court cases that gave people a lot more confidence. Sam Bankman-Fried got his day in court. Now Do Kwon is facing his. And it gave people a real more confident sense of, this being a lasting trend in industry. But probably nobody could have really predicted what was to come at the end of the year. And we'll kind of skip ahead of that and go in detail for a couple of events along the way. But certainly the first two parts of the year in Q1 and Q4 of 24 really had the most dramatic impact on the price of all crypto, but really on Bitcoin, right? Which is sort of the rising tide that lifted all boats, although it was not, the sole good performer. There were many others that performed quite well along the way. Ethereum had a little bit of a bump, and Solana had a pretty large one as well. And then there were bumps by many of the US-based cryptos. And so, the real kind of boon for this the election results. And it wasn't just for the Oval Office, but really, out of the roughly 400 legislative seats up for grabs, over 300 went to pro-crypto lawmakers. And so this was a real big kind of tidal shift in terms of what to expect in this industry. For once, really, there was a cry for not just regulatory clarity, but there was a cry for adoption and action towards really recognizing crypto, but above all, Bitcoin as a real vehicle for monetary transaction in the U.S. Now, we have obviously done a lot of investments globally, so we have seen some of these trends happen across the world. And so within the next sort of like couple of weeks post-election, you saw some of the sharpest rises in the price of Bitcoin, kind of going, roughly fair value around 75,000, and finally eclipsing the 100K mark. And that was really a psychological barrier that so many were waiting on and kind of hoping that it would signal kind of a new era in now Bitcoin, instead of denominated in just thousands, can be denominated in millions, in zero point 0.1 million Bitcoin. But maybe that's a good transition moment to turn things over to Sachin and kind of get some of his thoughts, at least some of these major headlines on the year, from the regulatory friendly approach in the courtrooms towards the financial authorities allowing consumers very easy access towards buying in the world of ETFs, and then bookending that with the election results, which have sort of continued to be positive growth signs for the price of crypto.
It's great. Thank you, Xavier. And it's a pleasure to be with you today. Thanks for making the time. And so I think it is appropriate to take a look backward before we start looking forward. And so our thesis is anchored around, our investment thesis, that is anchored around an acronym affectionately called ABCD. That stands for artificial intelligence, blockchain, chips, and data. These are the four strategic pillars that we view as the fundamental pillars of the internet, and where investments will be made and where value creation will be had really over the next decade, as the next iteration of the internet, i.e. Web3, will be taking place. So these four have been taking different courses over the last few years. These four sectors, so to say, have been taking different courses over the last few years. The topic of jour for today's discussion around blockchain and cryptocurrency has been met with much headwind over the last couple of years. In particular, it has been regulatory headwind. I think it is safe to say history will judge the last few years to be quite hostile from a regulatory perspective for cryptocurrency, and the catalyst for that was truly around the collapse of FTX. It is our feeling that in the wake of the collapse of FTX, many regulators felt the need to overstep on regulation, in some ways because they had egg on their face due to the collapse, as it caught them all blindsided. And so that hostility that was taking place, was the implications of that were lawsuits coming down into our industry on crypto firms, on blockchain firms, as well as the idea of the need to move companies, headquarters, teams, bodies offshore. And so, and it didn't happen in isolation. It was probably an industry-wide thinking and momentum that was occurring that the U.S. was no longer a friendly market for blockchain and crypto. So several of our companies, our portfolio companies, were considering and/or taking effort in moving their headquarters offshore. And by the way, they may still do that. And the reason in the current thinking is because we don't know what's going to happen in a later administration in another few years. And so the shift was occurring that U.S. was no longer being friendly. And as Xavier well mentioned, there was many seats that were up for election that turned out to be that won and that turned out to be in favor and pro crypto. And so we're starting to see an environment since November that is optimistic, exciting, and in favor of crypto back in the U.S., which is setting an enormous amount of tailwind for blockchain, for crypto, and what could be. This is now being compounded with what Xavier was describing around the halving cycle. So as Xavier mentioned, the halving cycle occurs roughly every 4 years. Every 4 years, we see an increase in price, and which we'll describe as a peak in price, and the following year, a trough in price. Every halving cycle has produced a peak greater than the last peak, more or less, and every trough has been greater than the last trough. So it's an upward into the right trajectory. We expect there to be a peak point likely this year, and there could be a correction next year. And we'll talk a little bit more in depth about what that means. But these two very macro tailwinds and trends that are taking place right now are compounding the halving cycle alongside what we would describe as a friendly and proactive regulatory framework that feels like it's we're on the precipice of unfolding upon. So with that, Xavier, I'll hand it back over to you to further carry the discussion.
Yeah, absolutely. And as you kind of start seeing and such, I'm glad you laid out kind of where MCD plays, because obviously, crypto is one leg of the stool, and I'll refer to blockchain and crypto interchangeably. The ABCDs are all about kind of these four technologies interweaving with one another to kind of create a greater internet than we've seen in kind of the last cycles. Every about 10, 15 years, there's a seismic change to the overall internet as we know it, starting with Web 1, which was kind of the very basic read version of the internet. That was mostly driven by the PC revolution, everybody now having access to their own computing power in their homes and businesses. It's kind of the Web 2 era, to the rise of the smartphone and mobile computing, which was also driven by this ability to read and write information. So an ability to share our files, our photos, our videos online. And we're kind of still at the tail end of that before we totally leapfrog into the third phase, the Web 3 phase, which is really about the read, write, and ownership, which is going to be driven by the rise of advanced and very specific semiconductor chips. So in all of these phases, you're seeing tremendous growth along with new startups eventually going public, and those public companies driving growth for the overall state of the economy. And so now, as we're kind of in this Web 2.5 phase, you're seeing a lot of companies look to position themselves with multiple technologies along the ABCDs. So no conversation about 2024 would be complete without talking about the rise of AI. And obviously AI was the term du jour of 2024. And it seemed like every pitch deck we looked at, even the ones that were supposed to be hardcore blockchain, did at least have AI at the cover or somewhere in the deck. And really that was because we started seeing AI in the public sphere begin to dominate the S&P, right? So we had not one, not two, but 3 times that NVIDIA peaked last year. So NVIDIA really being the dominant player in this space, where they are kind of the chip designer, and they'll use a couple of other fabrication plants like TSMC to actually push out these chips which power all of the devices that we can't live without. So they went from 1.4 trillion, then past 2 trillion, and they now currently sit at 3.4 trillion with about a 34x EBITDA multiple, right? So this is a company that is extremely in the focus, not just of the U.S., but globally as folks look to participate in this overall economy. And this is kind of where our two worlds intersect, the worlds of public and the worlds of private. Because in order to fuel growth for companies like NVIDIA, they also are some of the most acquisitive companies on the planet. And so that's really where you started seeing this rise of AI in the VC space, where startups were kind of having record rounds left and right. I think one of my kind of double take moments was in the middle of the year when XAI, one of the many companies started by our chief technology officer and chief Elon Musk, started it 16 months ago and quickly, rose that valuation to record highs in the space, and also record amounts of capital being raised into the space. And what we were really kind of seeing for that, where they raised, more than 11 billion towards the company and driving towards, valuations that were, in the 10-figure range. What this kind of shows us is that it was a new kind of investor that's kind of getting involved with these kinds of projects. And we make the argument all the time that it kind of goes beyond what we're seeing in the venture space, investing in not just the corporate side, because we started seeing, companies like Microsoft, Apple, all participate in rounds that were probably only restricted towards venture capitalists even 5 years ago, but also sovereign nations beginning to invest. So, among the many investors, the Qatar Investment Authority invested in Elon's company. And that wasn't the only one. We also have another one in our portfolio, Grok, which we speak about on webinars from time to time. And really, these companies sort of step up as providing an alternative towards the public cloud. And really, this is kind of this new trend. And I think it's very similar to what we've seen happen along the lines of crypto, right? So crypto originally started out as this really decentralized form of computing. It tried to become enterprise when folks like IBM launched Hyperledger and sort of come into a more controlled, moderated environment that, pretty catastrophically failed and led towards a bigger growth of public chains like what we see today with big B Bitcoin, not the little b. Little b is the crypto. So as we kind of see this first move from a decentralized to centralized back to decentralized, that's also what's kind of happening with AI, right? So AI began a little bit more in closed doors. So it started off a little bit more centralized, and it has increasingly become more decentralized as you see folks like Facebook creating public LLM models, where then startups that we see can access those models and create other tweaks, which ultimately create new companies and innovations. But when you start seeing other growth and large investments like what we've seen with Grok, now they're actually powering nation states themselves. And, Sachin can elaborate a little bit more on this, but what's to come here is, in terms of the data, which is really at the backbone of this next phase, the backbone of crypto adoption, the backbone of AI expansion and growth is really the data story, where, every day we are breaking new data records. We are sitting on over 3 petabytes of data created every single day. So that's 300 million terabytes. And, we have a terabyte in some computers now, some smartphones. So really just an unfathomable amount of space. And that's going to be driving greater needs for compute. And now there is potentially a greater amount of restrictions placed at the corporate level about, who can do business where, who can do business with whom. It's a little kind of outside of today's conversation, but I think startups have really begun to shoot the gap between, what is public compute versus sort of private growth of AI. And that's why you're seeing greater and greater investment, from sovereign nations in a phase that we call, such a new up with the term sovereign AI, which will really be showing this big shift towards countries adopting their own standards. We saw Europe band together and create their own AI standard. The U.S. is doing the same, driven in California, where these are beyond just data protection privacy, which happened about a decade earlier. This is really an attempt towards ring fencing not those that are operating in AI, but the vendors that are going to be involved in this transformation. And so there is this kind of symbiotic relationship amongst all of the ABCD, but really amongst AI and crypto. And we've seen this happen time and time again as we've traveled, all over the globe last year, and just kind of highlight, some of the things that we've been seeing in the Middle East, where areas like the UAE have kind of jumped out in front of policy and regulation towards creating a little bit more openness for not just AI, but also for crypto. And it was sort of at the expense of places like the US, which were a little bit flat-footed towards creating a defining policy of openness towards innovation, and then allowing that to kind of go a little bit more private. So they jumped out in the lead. Southeast Asia continues to be a powerhouse in this area, although they are much more active in the areas of decentralized finance and also options and derivatives trading within crypto. The U.S., we are still behind in those areas. But if you kind of look to see where the future growth is coming from, you can take a little bit of a look at the deck from both the UAE and places like Singapore, which have already been doing these kind of innovations at a sovereign nation investing into AI, and maybe such a good opportunity to kind of highlight some of the work that you're seeing within Grok that kind of speaks to this idea of sovereign AI and how that could potentially lay the groundwork for things like private crypto deployments and creating federal national banked stable coins.
Sure. Yeah. So thank you for that. There is a theme that is occurring across the world around, and we are seeing politically, the world is shifting toward more nationalism, less globalism. Once again, politics aside, but this is what many areas, countries, jurisdictions are starting to move into. And it's starting to manifest itself also in the ways of technology. One of which we'll describe is what is known as sovereign AI. This is not a made-up term. This is now becoming to be a more and more common term in which countries are investing in data operations, specifically AI data operations, for domestic purposes as well as for international domestic and exporting services as well. But primarily, they're setting it up for domestic purposes to fuel domestic industries. And the two that we're starting to see thematically across many nations are that they're building AI data centers for the purposes of healthcare and finance primarily. There's also aspects of startup and entrepreneurial aspects. There's also interest in exporting surplus additional services to neighboring countries and neighboring areas. But the primary objective and purpose is to be able to control their own destiny as it pertains to AI from a sovereign perspective, a country perspective, a nation perspective. And so they want to be able to understand what the data privacy rules are going to be for healthcare, for finance, and other sectors and industries within their the jurisdiction. And by way of doing this, what they have started to do is engage companies from a hardware perspective. In particular, they're starting to engage one of our portfolio companies called Grok, G-R-O-Q, Grok. Grok has become one of the leaders in providing AI chips and AI cloud services. It's one of the few companies that are out there that have a wing-to-wing solution when it comes to AI services. They've developed a proprietary chip to enable AI inference, which i.e. decisioning, as well as they've been able to build out a cloud service on top of it. And so in more specific, an example of one of these sovereign AIs is Saudi Arabia has partnered with Grok to build the world's largest AI data center in Riyadh. Grok, which is a U.S.-based firm based out of San Francisco, producing chips in New York domestically, has now started to export those chips to Saudi Arabia to build out this world's largest AI data center, which is really an impressive thing to see. I would encourage you all to go and Google Grok, check it out, see what's going on social media. You will notice that they have 747 cargo planes that are flying door to door with Grok servers over to Saudi Arabia from the States. As they land in Saudi Arabia, a data operation is being set up and built out by the Grok team, and all that intellectual know-how and proprietary knowledge is being used to operate those inference and AI data centers. And it is, once you get one of these operations and you get one of these engagements at scale, it is quite meaningful in terms of revenues as well. So Grok has become one of the leaders, not only in usage, not only in demand, not only services of sovereign AI, but also they have started to skyrocket in terms of their revenues and operations for themselves. And so this is not only this idea of nationalism, this idea of sovereign AI doesn't stop there. As we continue to kind of pull the thread on this, and we carry it to one of the topics of today, which is crypto and blockchain, we're starting to see also a play unfold where more and more nations are starting to consider a strategic reserve in crypto, more specifically a strategic Bitcoin reserve. And this was something of a political football that was being kind of tossed around in 2024. However, for the past several years, little to mainstream media knowledge, this has been something that has been an undercurrent in the crypto environment over the last few years. There have been 11 nations that have already taken Bitcoin and put it as a part of their national treasury. These countries include Australia, Finland, Bhutan, El Salvador, Germany, many nations that you wouldn't consider, Ukraine and others. These are not nations that you would necessarily consider to be forward-thinking as it pertains to Bitcoin, but they saw something unique about it. They saw something that it could be akin to digital gold, and they started to get involved in it and put it into the U.S. Treasury. Here's another little-known fact. Amongst the 11 nations that already own Bitcoin, the U.S. is the largest one. So you all, if you are a citizen of this great nation, already have exposure to Bitcoin by the way of our treasury, by just being a citizen of this great nation. We have roughly about 200,000 Bitcoins in treasury today. We were able to obtain these through seizure of an illegal company. That illegal company was called Silk Road. Silk Road was a bad place where you can go and buy and sell anything you would want on the internet, and the formal currency to buy and sell those goods and services was in Bitcoin. The government came in roughly a decade ago and shut that company down, seized all of their assets, and came into actually more than 200,000. I believe the number was closer to 260,000, more directionally than accurate, but directionally around 260,000, and they auctioned off roughly about 60,000 of those Bitcoins over the last decade. However, they still have, the U.S. government, the U.S. Treasury still has 200,000 in custody today, or roughly thereabouts. So the question that came up in the election was, what are we going to do with this? Are we going to continue to auction it off? Are we going to hold on to it? Are we going to add to it? And this is where the conversation became around a strategic Bitcoin reserve. As we see the dollar being inflated and your purchasing power being decreased, as we see Bitcoin being a better version of gold, does it make sense for us, if you run a game theory exercise amongst us and other the largest GDP nation states in the world, does it make sense for us to actively start buying them? And also, just to put things in perspective, when I say we are the largest holder of Bitcoin today, it's order of magnitude above others. Some of the other nation states, and probably one of the more notable one is El Salvador. El Salvador is actively buying Bitcoin and they are actively mining Bitcoin. And today they have somewhere in the magnitude of 3,000 to 4,000 Bitcoins, which is a great outcome for El Salvador, right? 3,000 to 4,000 Bitcoins. We have 200,000, right? Orders of magnitude above others. Australia, at one point in time, had 26,000 Bitcoins. We have 200,000 Bitcoins. So we are well ahead of the game in terms of our adoption in Bitcoin, and are head and shoulders above many other nations that are starting to either enter, dabble into this. And then the question is, well, what do we do from here? Well, there have been bills put forward, and there's affectionately we call these two senators crypto queens. The media does, that is. And these two crypto queens are Cynthia Lummis from Wyoming, Senator Lummis from Wyoming, and Senator Gillibrand from New York. They're cross-aisle, bipartisan effort, have both drafted bills around the strategic Bitcoin reserve as well as crypto regulation framework, positive crypto framework. I should add to that. And so this idea of a Bitcoin reserve is becoming more and more real. We will see how this plays out, but I think amongst the three options, do we sell our position, do we hold our position, or do we hold and buy new? I think the first one is becoming less and less likely, and the second two are becoming more likely. And so the question will be, what does the new White House, what does the new administration decide to do? At Bitcoin 2024 last year, RFK Jr. put forth a proposal that we need to buy upward to of 1 million Bitcoin. We're 200,000 today. He wants to add an additional 800,000 into our treasury, in which he believes, and many in the incoming White House believe, will help offset and pay down our national debt. Cynthia Lummis also put forth a bill during that same conference, the Bitcoin 2024 conference, in where she said we need to buy, I believe it was 400,000. Or an incremental 200,000 from where we are today. And so these are interesting data points that I think are going to inform the incoming White House and our next president on what that Bitcoin strategic reserve will be and what it will look like. The reason I share all of this with you is because there is an enthusiasm and excitement that if the U.S. gets involved with holding, having a framework to hold a strategic Bitcoin reserve deliberately, not just accidentally as we have been doing, deliberately, and it starts to add to it, it will set off an arms race. There will be more and more nations, not just the 11 that I noted before, the 11 of roughly 200 nations, but there will be a number of net new nations that enter the crypto game and start to put more Bitcoin onto their balance sheet and ultimately accelerate the price discovery around Bitcoin and ultimately all of crypto. So that is one of the large themes that are unfolding today, and we're literally going to find out in a couple of weeks, or probably maybe in a couple of months, what this is all going to mean. But there's a lot of excitement, a lot of enthusiasm that there will be a plan put into place to reinforce our Bitcoin reserve or add to it. So with that, X, I'll hand it over back to you.
Yeah, that's probably a good place to pick up. As you said, a lot of great things that kind of reminded me of the relationship again between public, private, and government. And one of the big stories that we'll continue to watch this year, because it was the dominant one, not just of last year, but of the past 5 years, is MicroStrategy, right? So MicroStrategy has been the top performer in the S&P for the last 5 years. And really, for those that are not aware, they started off as kind of a dot-com company that really collapsed. And, they kind of changed their fortunes around when they decided to get into Bitcoin, which is just basically a complete change into, really what they were known for. And, over the years, they continue to buy, not just a small amount, but a massive amount of Bitcoin. And really this started in 2020. They bought over 21,000 Bitcoin, worth now, actually at the time, worth 250 million, now worth several times that. And at that time, they became the first publicly listed company to add Bitcoin to their balance sheet. And this became a real big seminal moment because onlookers, and actually Microsoft recently did this. They voted against it, but they were testing the waters with adding Bitcoin to their own balance sheet, and companies will continue to do this. But it started with MicroStrategy, and at the time, the CEO of MicroStrategy, Michael Saylor, he said that the belief in Bitcoin as the world's most adopted cryptocurrency is both a dependable store of value and an attractive investment with more long-term appreciation potential than holding cash. And that was a direct quote. So really, how much Bitcoin have they bought, and what could that signal for the future and the market, and in kind of this parabolic phase? And we'll talk about kind of where we think we are on this journey, which can best be described as an S-curve in the tech world as we begin to adopt greater amounts of fluency and comfort with where we are at the technology. So since that $250 million purchase, the company has purchased Bitcoin dozens of times, ultimately spending more than $16 billion to buy over 330,000 Bitcoin. And, to close out the year, they had their largest purchase of $4.6 billion, and they brought the total value of their holdings to above $30 billion. And so, these are some pretty, just video game-like numbers, but they still own roughly 1.5% of Bitcoin's total supply. They'll continue to make purchases in the future, and they've already kind of done so this year. And really, the investment community have responded quite favorably, right? So obviously, they've continued to perform extremely well. I believe 2,500% since that time. And other companies have begun to really copy this strategy, or at least figure out ways that they can get involved within the crypto economy. We've seen both PayPal and companies like Airbnb dabble in the space in terms of how they'll accept crypto as well as Bitcoin as payments for some of the products. And obviously, of course, the Tesla forays into both Bitcoin and Doge, which, probably a funny story on that. If for those that didn't catch it, the Department of Government Efficiency spells out the acronym of Doge, which is Elon Musk's coin of choice. That also experienced a huge parabolic gain to close out the year. It has since cooled. But those that are kind of keeping a watchful eye on this, and over at the fund, we have a slightly different investment strategy. We'll invest in the kind of the core infrastructure. We'll probably miss some of the upside of the meme coins, because those things can be, in addition to being highly speculative, they're not always based on fundamentals. Doge now is at least trying to entertain the idea that the coin will have some utility. That's kind of why some folks are really investing into it also as a way to kind of gain added exposure towards a friendly administration. But to kind of piggyback a little bit on Sachin's point about sort of the pro crypto legislation and what that's going to be looking like and influencing the market into this year, beyond having the strategic crypto reserve, which we may know in as little as 12 days if there's any sort of executive orders or action. If the 2016 presidency was any indication, we will expect a whole host of executive orders to begin right away, with certainly 4 years of planning between presidencies. Now, as we kind of gear up for what this reserve will continue to look like, other countries have continued to buy into the currency, but then also there are other things at play with sort of the administration and kind of their points of view on what is needed to kind of continue having strength in the crypto market. There have been public declarations by incoming President Trump to create a new crypto capital here in the U.S. You could argue now that the crypto capital of the world may be a place like Singapore or maybe Dubai or someplace in El Salvador. But the goal and intention of kind of revitalizing the U.S. efforts are really going to be benefited by kind of one or two pretty critical things. One is kind of the tax treatment or the repatriation of crypto assets into the U.S. There have been, public statements by our incoming president that those crypto companies and chains that are based here in the U.S. would be tax exempt. That is why you also saw massive gains in U.S. domiciled cryptos like Ripple, which experienced a huge gain in this time. They also experienced a very big growth once they had some of their days in court settled, which were kind of pending litigations against them. And of course, the change in administration from Gary Gensler, who was, very, very anti crypto, so much so that companies, even in our own portfolio, flocked from the U.S. and went towards more favorable areas into the U.S. He is going away and getting replaced by, very, very favorable crypto candidate. And what that will look like is, again, potentially now for companies that are domiciled in the U.S., no tax on sales. And so in addition to Ripple, you also saw huge gains in Cardano. And we always joke that show us a project that has been, written for Cardano, and that'll be the first one that we've seen this year, because it has been a largely forgotten about chain. And as Paul Atkins will succeed Gary Gensler, Paul Atkins has already firmly established his love for Bitcoin and his well-versedness for the asset itself. So, kind of who is coming in to lead the three-letter agencies, as well as the tax treatments, will create more buzz for what's coming. So in addition to MicroStrategy, as we kind of now look ahead in 2025, we're still geared by a lot of the changes in 2024. So 2024 was all about trying to get inflation under control. And so there were supposed to be as many as five rate adjustments over the course of the year. We ended up getting 3, but the first was the biggest, right? So we had this in September, a 0.5 decrease, or 50 basis points, and this created a pretty big shockwave in the market. And obviously, Bitcoin has a very watchful eye for what's happening in the world of interest rates, kind of for two main reasons. One, there's liquidity, but then two, also it creates a potential alternative when you have folks like MicroStrategy that are literally borrowing money to buy Bitcoin. I think their effective price on Bitcoin is something like in the 40,000 range. So basically for every dollar they're putting in there, they're getting half of it back in Bitcoin. And so what this will mean is not just one rate cut. We ended up having 3, so we went from 0.5 down another 0.25% in November, and then finishing the year with 0.25%. So we kind of are looking at a 4.25 to 4.5% just to start 2025, right? And if we are to believe some of the continued comments about the incoming administration, the rates will continue to go down. And as a result of that will drive increased liquidity for things like crypto, as there'll be more availability on that asset. But it also could mean a little bit of a contradiction, because it could also signal a weakening dollar, as rate cuts can put downward pressure on the US dollar and potentially making dollar-denominated assets like Bitcoin. And we always see Bitcoin is typically quoted and traded in relation to the US dollar. that could continue to be more appealing to international investors as they look to continue to diversify and enter into the market. So, these are kind of going to be some pretty interesting things. And as we mentioned on the S-curve, really, what is that? The S-curve is a way to describe tech adoption. And if, we actually have done a podcast about this, but basically it talks about, three main areas. There's over time when we have a product, there's not that many people who will try a new product. And you can even think about Bitcoin. When's the first time that the folks on this call have heard about Bitcoin? Maybe some people heard about Bitcoin in the last 2 years. Probably some have heard about Bitcoin within the last 5 years. Probably a smaller number within 10, and so on. So in the infancy, that's really when the progress is at its lowest. You have what are called the innovators really experimenting with an asset or with a product. And that's usually the time even when VCs don't necessarily get involved. We tend to come in a little bit later as we kind of come up the S-curve, as we begin to think about things like ramping up. So as we shift from those innovators to the early adopters. And the early adopters are the real first sign of an actual market beginning and forming. And so that, could argue, which was the sale of the most expensive pizza of all time, the Bitcoin pizza. While we laugh and say that, 10,000 Bitcoin for two pizzas, the first transaction of Bitcoin actually buying something was kind of a waste. What it did was validate that A, the technology works, and B, that it could actually satisfy a need for producing value in exchange for compute. And so now, as we kind of ramp up on that S-curve, we're beginning to think about things like market maturity. We are very far away from a mature and stable market. That is when you'll start to see the Bitcoin price level off, which we're very far away from that. But some kind of signs that is where we're heading are things like increasing the regulatory clarity and transparency around digital assets, things like easy access towards your digital assets at your local savings and loan, not just, the 11 institutions that were green lit to be the official custodians, for the ETFs. So we will continue to see, how other countries respond here, especially as the U.S. has sort of planted its flag to be, the next capital here. And maybe it's a good time that we kind of pivot and see if there were any questions in the last couple of minutes here. I'm seeing, please do fill out any questions that you may have to the questions. Yes, Mark is out for today. We are covering and wish his Fighting Irish well as they set to do battle with Penn State. But as we kind of wait for some more questions, we'll kind of maybe fill out what could be some kind of bold predictions for 2025. What we have been seeing are kind of some very interesting price points with crypto and Bitcoin. So we experienced our all-time highs before the halving, which had never been kind of done before. So we had kind of even before the gains late in the year, we had a double peak. We had the ETFs going in favor, and then we also saw other countries adopt ETFs as well, namely Hong Kong, which also adopted the Ethereum ETF, which is on its way here within the US. So as we kind of look to see what's headed this year in the natural cycle, and Sachin did a great job laying this out, we would already expect, just based on the 2012, 2016, 2020 halvings, that we would have a peak year just based on past events. Not to say that will happen this year, but it has happened on the prior halving events. And now that there's just so much more buying power, and the numbers are actually pretty staggering when you kind of look at what this meant for the market, and then we'll kind of say, okay, overall to close last year, 3.9 trillion was the new all-time high market cap for crypto as a whole, with more than 130% gain year over year. right? And so that alone is larger than the market caps of Apple, Microsoft, or NVIDIA. We spent a lot of time talking about NVIDIA. And just for stable coins themselves, which could just be the new way that you can expect to see settlement, certainly internationally, over 200 billion, which was another all-time high. You also saw 123 billion total assets under management by spot Bitcoin ETFs. That's a market that didn't exist in less than a year. And as we kind of look to see where could we approach in this upcoming year, there are estimates are all over the board. There have been estimates as high as 200K. There have been estimates as low as 70,000. So basically a reversion back to the pre-halving price. And really, we will have a very good indicator of if we are on track to things like a Bitcoin reserve, where that could come by way of an executive order in as little as 12 days. The buying cadence would have to be ramped up significantly to meet the 1 million target that's proposed in the bill. So that would be 200K worth of buying per year is really where a more of a continuation of what's already been happening with the things that led up to the big growth that we saw last year, the continued buys by companies like MicroStrategy, the continuing attention that will face not just internationally, but also here in the U.S. as Bitcoin becomes much more recognized and legitimate way of not just conducting digital transactions, but creating a real savings environment for the holders in what will be a declining interest rate environment over 2025. But maybe I will also ask my partner Sachin for his kind of predictions here. And maybe before I do that, there was a question such that came in. If the world knows about BTC going up, why is the price dropping so much in the last 2 days? And maybe you can sneak that into some of your predictions for this year.
Yeah, sure. So just to touch on that question, I think there's a often referred comment and statement and motto, so to say, in the crypto world: when in doubt, zoom out. And the spirit behind what that means is that we live in a very volatile asset class, right? Arguably the most volatile asset class. There will be day-to-day ups and downs. It will go from 100,000 to 90,000. It will go from 110,000 to 90,000. The point is around this, when in doubt, zoom out, that look at the trajectory of where it's been over the last few years and where it is and where it's going, where we expect it to be going over the next few years. When you look at that level of trajectory, when you look out beyond just the day-to-day volatility of it, let's just take an example. Since the election, when the election occurred, I believe Bitcoin was priced at $68,000. Over the course of 2.5 months, the price of Bitcoin has shot up all the way close to $105,000. Right now, it's sitting closer to, I'm not sure exactly where it is right now, but the last I looked, it was closer to 95,000. That's a dramatic amount of value that was created just in the last 2 months. So it's important that we don't get caught up in the day-to-day volatility, 1 day, 2 day, 1 week. It's important to zoom out and see exactly what the trajectory looks like, and which is kind of taking that one step further and looking to what 2024 holds, or excuse me, 2025 holds. I like to kind of break this out into the continental services and demands around crypto. So what I mean by that is over the last few years, North America has been considered hostile, and specifically U.S. has been considered hostile for cryptocurrency. Specifically being at the helm of that hostility was the SEC chair, Gary Gensler, and his enforcement strategies in and around our industry. But during that period of time, we had other markets that were taking different approaches, different strategies. So in Asia was thriving around digital assets. Asia had a And if we consider the U.S. to be heavy in spot trading, the Asian markets were very heavy in derivatives trading around digital assets. And a bulk of the global services, the global trading was taking place in Asia, which gave rise to platforms like Binance, which is the world's largest digital asset trading platform, as well as custodian on a global stage. So Asia had a lot of activity going on, but there was concerns around compliance in some of these Asian platforms. But people would do business there, and they would hold their nose, and they would continue to operate there and be customers of those services. You had places like South America where you saw hyperinflation, literally across almost every country. Probably most notably with Argentina, Venezuela, but it didn't stop there. Many nations that were seeing hyperinflation and that were starting to become more and more friendly from a retail base and now from a political base. We're starting to see many of the politicians lean into things like Bitcoin and others. And then last but not least, you have a market like Europe. Europe took an interesting approach, and Europe passed across the EU, they passed a law called MiCA. MiCA was intended to offer a path forward for people specifically around stable coins and that side of the sector of our industry to become registered and ultimately offer those services in a compliant way. They may have been a little bit too confining in their regulation around MiCA. And so there's concerns around now if Europe is starting to siphon off crypto services, which means that it would go elsewhere. And where is it going to go today? What we're starting to see now is a flood of new activity coming into the States. There's a lot of excitement, a lot of optimism, a lot of enthusiasm in the States in terms of companies, services now flooding back into the States and offering it here. So what I see happening over the course of the next 12 months, if I had to kind of summarize those trends that I was just describing, that you're going to start to see a lot of these startups, companies offer renewed services and reinforce existing services in the U.S. that will be offered to the rest of the world. What this is going to mean is, I believe, with the regulatory framework that could be pro-crypto from a tax perspective, from a compliance and registration perspective, and things like strategic reserves being put into place as well, I think you're going to start to see a very robust environment. And so my confidence level in that enthusiasm and that optimism has only increased since not only seeing the election results, but also seeing the individuals being put in place in the government who are going to be putting a framework in place for all of this activity to operate and thrive in. So I think we have we are setting the stage for a very exciting period, specifically not just in our industry across the world, but specifically our industry in the U.S. for being the centerpiece of what could be a very thriving crypto economy in the coming year and in multiple years.
Yeah, that's well said. And unfortunately, we'll have to end it there. And want to thank everybody for joining on this inaugural kickoff to the year. And we couldn't be more excited about what we have in front of us. And as we said, projects that are really making security a priority and that are informed and adaptable and that have actual substance are really going to be the winners here in the face of things like MiCA and the changing and amplifying U.S. regulatory landscape. And look out for things like Solana and XRP that'll be on the docket for the next approvals on the ETFs. The flow of Ethereum has not matched Bitcoin, but these could be some canary in the coal mine moments as we kind of look to see what part of the S-curve we're on. So thanks again for everybody that was able to join, and we'll wish you a Happy New Year once again. Thanks so much. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.